The CPI is coming tonight and is expected to come a little bit of a mixed data, okay? If we look for the month of a month, is expected to come below the previous, and when we look to the year over year, is expected to come above the previous. Now, the core CPI month of a month is expected to come higher than the previous, and the core CPI year over year is expected to come higher than the previous as well. This is one of the most important releases, and this is why I think that. See, if we look to the CME FedWatch Tool, just look at this image right here. For September, we have a highest chance of a 25 base points cut based on the NFP that we got on this month, the month of August. So 2 weeks ago, pretty much, we had the release of the NFP job numbers, and that was, a really surprise for the whole market. Some of them say that it was rigged, some of them just believe the data, some of them, I mean Trump, thinks that was rigged, and he fired the BLS lady that was in charge because he said that she was manipulating the numbers when the Kamala Harris was into election against Trump and Biden was into administration. So anyways, we're not going to get into this merit. What I want to come back here and focus is the CPI. But the CME FedWatch Tool is predicting a more than 70% chance of cutting 25 base points into the month of September. Now, why is that so important? Because the CPI is one of the most watched releases around the whole world. And if that comes higher than expected and higher than previously, then the whole CME will reprice again, and we most likely won't have a 25 base points cut in September. And from there, the US dollar will be very strong. But now, before we go further and I explain a little bit of bits and pieces about the CPI, I just want to step back a little bit and make sure that you are already subscribed to the channel, and make sure that you've thumbs up this video and also have joined the Telegram group. The link is on the description, and also is aware of the webinar that we're going to have tonight from 4 to 5 p.m. on Sydney time, where I will be discussing more in depth, not broad as I'm going to be doing now in a few seconds, but more in depth about the core CPI and the CPI from USA. Okay, now moving on, let's get into what I'm expecting for the CPI. Well, as I say, it's one of the most important ones for the whole year because we had all the important releases, but this one is just best. It's more important than the ones before because of a simple thing. And the reason is we have a very high chance of cutting from the CME FedWatch Tool. And with that, the market is looking at the Fed as a go, and they will do a cut, and then maybe they do another one, etc. So that being said, what I'm expecting is basically a higher than expected releases. So basically, what the consensus is saying, I do believe it will be higher. Okay, and if that is higher, because as I'm taking a few things into consideration here. First thing is that the job numbers was quite low, but we have Trump saying that was rigged, and he always gets and finds a way to get across those things. So what I'm looking at is if those job numbers are fake, that it's quite of a push, 70,000 from what was expected 140,000. So that was, it's a bit of a big move. If that was rigged and that was fake in a sense, then there is people out there working and there is people out there spending. If they are spending, the retail sales will be up. And if the retail sales are up, then we have a higher CPI and core CPI, okay? Now, the core CPI, maybe we will have higher prices just because, it's excluding energy and food prices. And when I say energy, the energy, I say, it's about the oil prices, okay? It's one of the energy components, and the foods, of course, all of the foods. But if we take those two items, we still have the households, okay, and the shelter costs, and these are still up and have been going up since the whole year. So most likely, the core CPI will be higher, okay? Of course, it's not the favorite of the favorite of the favorite of Fed, but the PPI is still, quite following the CPI. So if we have a higher CPI, most likely we're going to have a higher PPI as well. All right. So I'm expecting, yes, a higher possibility of above the consensus, and from there we most likely will get a stronger US dollar. If we have the opposite, then most likely we're going to have a very weak US dollar, and euro dollar would go up, pound dollar would go up, US dollar, Japanese yen would go down. And as I've talked about already, these were the favorite trades from last week to this week. All of them hit it, take profit. So again, another week for those who have been following us, following the channel, following the LinkedIn, following the Telegram and following the webinar, another 140 pips or 1,400 points. So that's, do times one lot, you would have made $1,400 in a week. Do times 5.5 lots, or half of a full lot, you would be doing $600, around $700 on the last week. Due to 001, you would have done $14. Of course, there is a chance of us losing everything in the next week, but looking at the last couple weeks, looking at the last couple weeks, we've been into a very good winning streak. So this is why you should be subscribing to the channel, giving us a thumbs up, and joining the Telegram, because that's where you're going to get the link for joining today on the webinar, and where we'll be more in depth about this topic. So I see you tonight, or I see you in the next video. See you guys. Have a great one. Bye bye.